Taking place in the Lok Sabha right now. We're going to cut across.
Of 2 years, extendable by a year for finalizing the provisional assessment. That will itself bring in a lot of certainty for those importers and exporters. Sir, we also propose to extend the time limit for end use of imported inputs in the relevant rules from 6 months to 1 year. What this actually means is some exporters, in order that they produce goods for export, import some components. The customs duty is not paid because they're bringing it for the production of goods which have to be exported, because we don't export taxes. But for that use of that component which is imported, we normally give 6 months, saying you brought it in June 2025, by December 2025, you should have sent that product out, that product which you manufactured with this particular item imported. Many exporters found it difficult. The 6 months period is not sufficient. So for them, we have extended that time period to 1 year. So this is more an export-friendly measure that we have taken. So we have actually allowed the industry to better plan their imports, and also we are providing operational flexibility. So these are as about the finance bill as it was presented to the House. We are of course coming up with some government amendments. The amendments which are being brought, 4 of them I'd like to highlight. The simplified safe harbor regime in Section 9A for investment funds managed by fund managers in India. Normally, these fund managers are expected to verify that no one exceeds the 5% limit in terms of direct investment or indirect investments. So it is proposed to be made further simpler by removing this 5% condition for monitoring indirect investment, because it becomes too cumbersome for them to search for who the investor is indirectly, and that itself hampers investment, so we are removing that. Clarificatory amendments in the provisions for IFSC's provisions and presumptive taxation for service providers for electronic manufacturing units is also being brought in as government amendment. And the third one, for clarity and consistency, a government amendment is coming in for small changes in the block assessment provisions, and then the 6% equalization levy, which was being proposed, which was in effect for advertisement and other things, is being proposed to be removed, so that we can address the uncertainty in the international economic conditions. So largely, these are the major... yes, I'll answer. These are my opening statements. I'll come to answering each one of the members' points. I will come to answering. So these are the finance bill related So then I now come to addressing individual members who have raised issues or sought clarification. So I'll go one by one. By the issue, 2 or 3 members could have spoken on each of the issues. I'll go by the issues. So on the income tax, as I said, members have shown concern for incremental increase over 12 lakhs. What if I think this was a member, Sri Neeraj Maurya, who had raised this question about if income is 12.10 or 12.20 lakhs, tax will have to be paid. So ensure taxes are graded from 12 lakh rupees is what the suggestion came from Sri Neeraj Maurya. So I want to say that even while I read the budget speech, we made it very clear that marginal relief is being granted. Under the provision of Section 87A, it has been ensured that the tax payable by a person having income marginally above 12 lakhs is required to pay only the marginal amount of tax equal to the amount of income above 12 lakh, so that his carry home is also 12 lakh of rupees. So he may earn incrementally more, but he'll still take back to his home 12 lakhs, and that increment on the incremental amount, the calculation is also very well explained. For instance, with an income of 12.10 lakh, rupees 10,000 is what he earns over the 12 lakh that he already earns. So for that 10,000 rupees, it will be paid as income tax only. Tax without marginal relief on that person earning 12.10 lakh would have been 61,500. So we have given the marginal relief where he, for the 10,000 rupees, he earns more than the 12 lakh. The 12 lakh is exempt from tax, but the 10,000 will have to be paid as tax. He would have ended up paying 61,500, whereas because of the marginal scheme that we've added into this scheme of income tax, he ends up paying only 10,000 rupees. So, and when income of rupees 12.20, only 20,000 will be paid, and he will still take the 12 lakh. Otherwise, the marginal relief, if not given, he would end up paying 63,500 rupees. So the marginal relief has been brought in for the incremental increase in pay. Sir, personal income tax has been reduced by way of rebate. This can be altered in the coming years. It may be done away with in the future years if income tax collection is lower. Was one of the questions asked by an honorable member here. Sir, I can only say, if you look at the track record, even during COVID we did not raise tax. So where we have come up with a rebate in order to benefit the middle class, an element of suspicion is being brought in, saying, what if tomorrow you... I'm sorry, sir. Sorry? Sorry? Sorry?
On petroleum products, didn't you bring cess on during COVID period?
On petroleum products? Excuse me, sir. I will answer what I've heard till now, but if members want to ask these questions, I will also point out to them. Citizens are our citizens. I have not raised any rates on any item, nor did I increase income tax. But if fuel is being brought to discussion, and that too by honorable member from Tamil Nadu, I will say their manifesto promised. They have not fulfilled their promise, and he is asking me questions. Amazing. So, sir, N.K. Premachandran ji has said collections in personal income tax